This video is for general educational purposes only and reflects our experience of UK tax and HMRC matters. It is not tax advice, and professional advice should be taken for your specific circumstances. Hello, my name is Comfort Iore. I'm a co-founder of CMB Partners Limited.
Hello, my name is Brian Duckren and I'm a co-founder of CMB Partners Limited, and welcome to Tax Chats.
I think every one of us may have received a letter from HMRC saying, oh, you filed your return late or you paid the wrong amount. So how far back can HMRC go in terms of their compliance checks? Can they go as far back as 30 years, 40 years?
If during your inquiry and your questions, you become aware that something doesn't look right and you have reason to feel that that may be incorrect, don't have to have the proof at that point, that's when you start to open the gates up as to how far HMRC can go back. And generally speaking, the starting point would be 4 years. And it depends on the nature of the error that you see. And if you've got insufficient information, that error is normally treated as being at this early stage as careless, and it may be careless despite taking reasonable care, in which case HMRC will limit itself to going back to 4 years. As the inquiry develops and the officer gains more information, they may take a view, and bear in mind it's their view at this stage, they may take a view based on the information, the evidence they've got in front of them, that actually this is more than just a careless despite taking reasonable care. It's actually a little bit more serious than that, and it's a careless thing. You should have done more to prevent this. In which case, HMRC can now extend looking back into your affairs a further 2 years, so that's 6 years.
Yeah.
So you start off with 4 years, usually the starting point. If it's a careless, then 6 years. Then there are the occasional instances where HMRC may have sufficient evidence to lead them to believe that the error was in fact deliberate. In other words, somebody set out to deliberately understate their tax liability to HMRC, and they did stuff to try and cover that up and prevent it. In which case, you're now looking at something HMRC calls as deliberate, and in that case, they can go back a lot further, up to 20 years, in serious cases, which are literally your fraud type cases on there.
Hello and welcome to Tax Chats with CMB Partners. My name is Comfort Iore. I'm a tax specialist and tax solicitor.
Hi, and my name is Brian Duckren. I'm also a former HMRC officer that used to specialise in tax inquiries and work in civil recovery. And together we're going to try and share some of our knowledge and help you to understand why HMRC does what it does.
In this episode, we're going to be talking about HMRC tax inquiries. So Brian, why does HMRC investigate, carry out compliance checks and inquiries into SMEs and sole traders?
Well, the first thing to say is, if you're ever the subject of an inquiry, it's not personal. Most of these inquiries are generated by systems and data and analytics. The most common analytics system that people tend to talk about is the one called Connect. But HMRC has a number of other systems and a vast amount of current data that it uses to cross-check on tax returns. So some of the reasons why an inquiry will be flagged up are out there and commonly known. There could be changes in the way that your income is being declared. It goes up or it goes down. It could be a large one-off transaction. It could even be your compliance record. If you're a poor payer and you file your tax returns on late on a regular basis, year in, year out, that can also bring you to the attention of HMRC. You've got to remember, inquiries have been around for a long time. Yeah. It's part of HMRC's job. An inquiry checks and makes sure that no one part of the system, as it were, or no one part of the economy is getting, shall we say, a better deal than it was intended. It's also there to catch people who don't pay their taxes on time. Let's be honest, that does happen. No one states it. But it's always been around. HMRC's always had this power, and it's nothing new. But having said that, if you are the subject of an inquiry, I can easily understand, having been on the other side, how terrifying it could be.
I was going to say, I think every one of us may have received a letter from HMRC saying, oh, you filed your return late or you paid the wrong amount. So how far back can HMRC go in terms of their compliance checks? Can they go as far back as 30 years, 40 years?
Well, great question. First thing I'm going to do is I'm just going to, because we've used a couple of terms here. We've talked about tax inquiries, compliance checks, and you will hear tax investigations. And these are all terms that seem to be used generally in the public. HMRC tends to use one term now, and that is a compliance check or just a check. And if you think about it, a check sounds a lot less adversarial and accusatorial than, say, a tax inquiry or a tax investigation.
Yeah.
But they're all pretty much the same thing, and they all take place across all heads of taxes, be and maybe in slightly different forms, be it in direct taxes, corporation tax, self-employment tax, VAT, all of them, they're all pretty much the same sort of thing. And the basis here is that HMRC checks a tax return. So in order to answer your question, we need to just start with a little bit of a background here. When HMRC decides to take up an inquiry, it's looking at a specific tax return.
Yes.
One. Sometimes that might be just recently filed, or it could be within a 12-month period as such. And it's looking at the one tax return. Now, when I was doing an inquiry, and certainly when I was coaching and helping caseworkers, I always used to use the basis that until you find evidence, you assume that everything on that tax return is correct. It might not make sense, but it's correct. And you start on that basis, which means you're looking at that first return. Now, if during your inquiry and your questions, you become aware that something doesn't look right, and you have reason to feel that that may be incorrect, don't have to have the proof at that point, that's when you start to open the gates up as to how far HMRC can go back. And generally speaking, the starting point would be 4 years. And it depends on the nature of the error that you see. And if you've got insufficient information, that error is normally treated as being at this early stage as careless, and it may be careless despite taking reasonable care, in which case HMRC will limit itself to going back to 4 years. As the inquiry develops and the officer gains more information, they may take a view, and bear in mind it's their view at this stage, they may take a view based on the information, the evidence they've got in front of them, that actually this is more than just a careless despite taking reasonable care. It's actually a little bit more serious than that, and it's a careless thing. You should have done more to prevent this. In which case, HMRC can now extend looking back into your affairs a further 2 years, so that's 6 years.
Yeah.
So you start off with 4 years, usually the starting point. If it's a careless, then 6 years. Then there are the occasional incidences where HMRC may have sufficient evidence to lead them to believe that the error was in fact deliberate. In other words, somebody set out to deliberately understate their tax liability to HMRC, and they did stuff to try and cover that up and prevent it. In which case, you're now looking at something HMRC calls as deliberate, and in that case, they can go back a lot further, up to 20 years, in serious cases, which are literally your fraud type cases on there. So you've got 4 years, 6 years, and 20 years. Those tend to be the markers. In the main, most inquiries tend to sit around the 4 years, 6 years. If you do even get a deliberate, it's unlikely the officer will go all that well back unless it's exceptionally bad. But I have had them and I have done them.
I have had them as well. Going to the tribunal, there have been cases that HMRC has assessed as deliberate. The judges have found that it's not the threshold, I would say, for proving deliberate is extremely high. So HMRC does struggle to prove that the actions by the taxpayer was intentional and that they went out of their way to evade or to omit paying tax.
The level of evidence required to prove that somebody intentionally set out to defraud HMRC is a high bar. In fact, before I left, there was a discussion going on between your former department, Souls, and one of my business teams, talking about the fact that they had not got sufficient evidence of bar for a deliberate penalty. So let's give you an example, real life case where I was involved in one. And it actually was, went to a meeting, and I was dealing with a former chartered accountant, and they'd made an error on their tax return, and it was picked up by the system straight away. And they had made a figure, they'd put in a figure for a tax return and got something wrong to do with the reliefs, and it was blatantly out. It was completely wrong. Now, this is a chartered accountant. You'd think chartered accountants and HMRC holds accountants and agents to a higher standard than normal people. And immediately, red flag, bang, lands on my desk. And I'm looking at this, going through all this all the way through, and eventually got to meet the individual, have a conversation with them, and started speaking to them and asked them to explain why they got that figure wrong. And during that conversation, the individual explained what they were doing and what they said. Now, I was of the mind that that was a deliberate penalty.
Okay.
But then under advisement, it was suggested that actually I had to reconsider, because whilst it's obvious to me that they should have known and done better, the burden of evidence was very, very high. I had to prove and would have to prove to a court that that individual had it in their mind to understate the figure they'd put on that tax return. And that is a tough call to make.
Well, it's hard to make.
How do you prove?
You cannot say or predict what people are going to do.
It looks bad. It certainly looks bad. You slammed the door shut, you did this, and certainly everything about it makes it look bad. But having the proof that that individual set out intentionally, and that's what you're talking about here, is premeditated. They decided, I'm going to, either the split second before they hit the button on the tax return or some months before, that they were going to cheat. That's a tough thing to prove to a court. So unless you've got the smoking gun or records, and in another case we had the records, the guy was writing down the right figure, including the figure with the VAT, and then just striking the VAT out and then putting that figure on the tax return. That's pretty damning evidence there and then. They've got to explain that. So unless you've got that kind of level of evidence that's material and there in front of you, then getting a deliberate is a tough one. And we have seen tribunals knock back deliberate time and time again. But there you are. That's the way it goes.
And I also know that when you are found to have acted in an intentional manner, that HMRC considers that in that sense you're attempting to evade tax, HMRC still kind of advise the taxpayer to participate in a form of helping them arrive at the correct amount of tax.
I like you say advise.
Yes.
Yeah. Let's say they encourage.
Yeah, they encourage them because behaviour is also taken into account. The more you provide them with the information, the evidence.
It's like any system. The penalty system is designed at the end of the day. It looks at mitigating factors and it looks at the circumstances concerning the offence. At the same time, if you are able to demonstrate that you are cooperating and providing HMRC with as much help to help them to arrive at the right quantified figure for tax, then HMRC has the power to reduce the penalties accordingly by reducing these amounts on there. And it's all about early, quick cooperation and engagement with there. If you step back and you just want to play dumb and just delay things, well, then that's going to look bad.
Absolutely.
And it looks as though you knew. And it just, even if it wasn't a deliberate, you haven't tried to do anything to try and get it out. Inquiries are expensive. They take up time. They take up caseworkers' time. And they take up the taxpayer as well as the accountant's time. All time is involved. And if you, as the taxpayer, the subject of the inquiry, do not cooperate with it, that inquiry drags on. One other thing I ought to just mention about on things we were talking about, how far we could go back on inquiries. HMRC also can, in the cases of criminal inquiries, go beyond 20 years in terms of evidence.
Yes.
So in an equivalent inquiry, which would be, as you've mentioned, a COP9, contractual disclosure facility, where that's a criminal one, HMRC has the power to go and look at information and evidence well beyond the 20-year line. Now, practically, it's not really the done thing, because if you think about it, try and think about evidence that you've got from 6 years, then 8 years, then 10 years, then 25 years. You kind of, that evidence becomes a lot less solid, and there's a lot less of it around. But they can do that, and if they were to do that, then that's evidential evidence. However, the law prevents them from going more than 20 years in terms of tax assessments. So they can look back further. And if they were to prosecute, and HMRC has been known to take people to court, they will tend to prosecute with the Crown Prosecution Service or the law enforcement agencies. So it's not only just HMRC that can do you for tax, but I've seen cases where the police will bring a case themselves. But generally, in part, it tends to be HMRC's area of expertise and that field. So that's actually a bit on there.
That's very interesting. So what would you say to a taxpayer if they receive a compliance check? What should they do?
Well, having issued quite a lot,
the first three things you should do when you receive a compliance check from HMRC.
Number one, read the letter.
I agree.
Okay, open the letter, read the letter. You're going to have a sinking feeling in your gut. There's going to be a panic. No, you need to sort of just put that letter down, get yourself something, a cup of tea, coffee, then read the letter.
Very English. Get a cup of tea, cup of coffee.
Can I say? It's important to read the letter. You may not understand all of the information on that letter, but it's important for you to try and understand as much as you can. That letter is going to give you some important information. It's going to tell you what they are looking at, usually the tax return.
That's right.
They're probably going to tell you if they're looking at a specific thing on your tax return or if they're looking at the whole return. That's something is called internally in the HMRC and in the business aspect, or full inquiry.
Correct.
I'll talk about those terms a bit later on if you ask. But they're going to give you some idea of what they're looking at. You need to know what they're wanting. Otherwise, you're going to be all over the place.
And the year they're looking at.
And the year that you're looking at. Yeah. The next thing you want to be doing is you want to get somebody who knows how to deal with an inquiry, not tax. There is a big difference between somebody who understands tax and dealing with tax and dealing with an HMRC inquiry. You're dealing with HMRC, the organisation.
That's right.
Not the tax legislation. And the organisation operates in a particular way, which to those who are not privy or used to dealing with HMRC can be opaque. And that's the last thing you want. You do not want to be going into an inquiry and dealing with HMRC from a level of ignorance, because that can cause you. The reality is there's an imbalance of power and information, certainly in information. HMRC knows the process, it knows the rules, and its staff should be trained to be able to implement that. So you need somebody equally experienced and knowledgeable on your side. If not, you've got that power imbalance. And suddenly you could end up with a decision which may not be the right decision, as you've mentioned before in other cases, because the information that was relevant that needed to be presented to HMRC wasn't for whatever reason.
Yes.
Okay? So that's the important thing. Make sure you've got the right advice and experience behind you. Somebody who's dealt with HMRC and understands how HMRC operates.
So essentially somebody like you. Yeah, I would agree.
Yeah.
So let's talk about penalties now. So what penalties can apply if you are found to have underpaid tax?
Okay. Penalties is a whole subject on its own. So we're going to keep this quite simple and straightforward. And there's a lot more nuances to it. But the basic thing is there are like 3 stages of penalties, if you like. Remember I mentioned that there's something called a mistake despite taking reasonable care.
Yes.
What that means, if in layman's terms, is it's an innocent mistake. HMRC would prefer to say it's a mistake that somebody tried to take all reasonable care, but for reasons and things beyond their ability, a mistake happened. Could be a third party or something else. The bank could have put the wrong figure somewhere or whatever.
Yes.
In that respect. And that's outside of your control, and you couldn't have possibly noticed it and spotted it until this inquiry came place. So that's called a mistake despite taking reasonable care. In those cases, if it's found that there has been tax lost to the Exchequer, the Treasury, in other words, you've got to pay extra tax, then the penalty is based on the size of that debt. And it can range, in the first case, where it's a mistake despite taking reasonable care, from 0 to 30%. There are some other variations. There's something called prompted and unprompted. We're not getting to that at this point, otherwise we'll be confusing everyone. So basically, your bar line is 0 to 30%. And 30% of £100 is still 30 quid. It's a lot, you know? And then you've got the next level up, which I talked about, which was careless, where you should have done something, you didn't do something, or you didn't act to prevent something and it resulted in that loss. There, the penalty regime it goes up, and it goes up from 30% up to 70%. And if you've got a fairly hefty tax bill to pay, 70% on top plus interest is crippling.
It can add
okay,
up.
so figures get there, not to mention the inquiry costs as well. So it really goes up. And then in the case of deliberate, well, that's the most serious of offences from HMRC's point of view, and they will charge up to 70%, up to 100%, okay, of the actual unpaid tax. So that's quite substantial. There is also the opportunity where HMRC may, where it's an offshore offence, where you have got some offshore interests and you're not declared those, HMRC can in those cases go to beyond 100%. And that's usually dealt with by a different area in there. So they're quite stringent, those penalties. However, as you've mentioned before, cooperation is really important.
I would agree.
Quality of information being performed and being provided is there. The explanation being given there, and at the end of the day, the experience and knowledge of the tax inspector all plays a part.
And I would add your ability to provide records. HMRC love to see that people keep records.
Absolutely.
And accurate records. So the more your record is accurate, the likelihood that percentage will decrease.
A gap in your records is where inquiries start to grow. The number of times I've walked in and I've started to look at something and you ask for some information and the records aren't there or they're incomplete. That raises questions.
It does.
Okay. And remember, caseworkers should be trained to be skeptical. And there's a difference. Being skeptical means to ask questions. Well, why isn't that there? If the answer coming back sounds credible and reasonable, then the officer will go away and test that. And if it stands up to testing, fine. If it doesn't, you get another question. And that's where it goes on and on and on. What they shouldn't be is cynical.
No.
And that's a dangerous thing. That can happen, unfortunately, in this world that we live in. But they should be skeptical. And as I said, if you are cooperating, you are providing that information, then HMRC can reduce the level of the penalty and it can come down substantially. Quite substantially. And in some cases, they may choose to do what we call suspend a penalty. And this is another area of work where sometimes, unfortunately, doesn't get done right. But at the end of the day, what HMRC is saying there is if you are able to put in processes and systems that will help you to get your tax affairs right. Notice I said tax affairs.
Yes.
It's not just about the specific tax, and sometimes caseworkers get fixated on this. So if they're looking at a corporation tax, sometimes caseworkers will go, well, that suspension means you need to get your corporation tax affairs into order. Tribunals have actually taken a much wider view of this. You would know better than me on this. They've taken a much wider interpretation and says, well, actually the legislation says your tax affairs, get your tax right, which means anything. So if anything you can do to help make sure that you get your tax affairs right, that should be part of the suspension conditions. And that's not always something that is fully followed through or understood.
Well, I have seen cases where it has been at the tribunal, the suspended penalty will be because, for example, the individual was doing their taxes alone. They were trying to file their tax return alone without that extra knowledge or expertise. And by suspending it, they've probably told HMRC or provided evidence to suggest that they've employed the services of an accountant. And that gives them, let's say, better systems and ability to ensure that your tax affairs is going to be in order in the future. Really.
As long as they decided to do that, because believe it or not,
It's about behaviour, remember?
Yeah, HMRC is not allowed to insist that
No.
somebody who isn't represented goes and
Agree.
gets that, because
Yeah.
that's something for them to make a decision to do. But yeah, that's it. It's a whole new world, penalties, and I'm sure we'd get lots of people going in, whoa, and this and this and that. So it's a different thing altogether there.
So you talked about offshore income.
Oh,
So can HMRC investigate offshore income? I know the answer is yes. So, but how do they go about it?
well, there is now set up across a number of economies, and HMRC UK is one of them, an agreement. They're called, I've forgotten the name now. There's around 100 countries signed up, where there is an open reporting, where there's the shared information that's passed out on there. Furthermore, in addition to that, in inquiries, certain officers, certainly I did, you can contact other tax authorities in other countries to obtain information. It's certainly one I did.
The bilateral agreements.
A bilateral agreement, yeah. France, Italy, any of those countries, the US, they will share this information. So if you're aware that somebody may have activities, financial activities outside of the UK, which they haven't declared on their tax return, and you've interviewed them and they go, oh no, Gov, no. As it happened in one of my cases, I was talking to an individual, don't go anywhere, I just sit at home all day and go to work and then come home. And it became through other sources of information that, in fact, this individual had got an interest abroad. And I contacted the relevant country, their tax authority, and obtained information, and then had a conversation with the individual and said, do you want to think again about what happens there? So that's something there. Now, what you ought to mention, we talked about earlier on about HMRC having a lot of databases and information. HMRC has access, and has always had access to, flight information from major airlines here in the UK.
That's interesting.
So that's something that I could regularly call upon, and certainly some caseworkers can call upon. So they are able to see if you go in and out of the country. Sometimes some of the questions you may be asked if you're being questioned by HMRC is, do you have a passport? Do you go on holiday? These sort of questions are asked as routine, but it's also important for HMRC to understand that if you do go on holiday to a particular spot, that's not necessarily suspicious. That's because you do go on holiday. If you then say to them, no, I never go on holiday, well, you shot off. What's that reason? There could be a good reason, family, relative, whatever. So HMRC has all of that information and has always had that information. There's also a lot of talk about HMRC being able to see your bank statements and things.
Yeah.
HMRC's always had information reported to it by banks
Or
under the
have the
necessary
power to request you to provide those information.
Yes, for a long time on there. All they've simply done is they've just simply tried to cut away some of the red tape to make it a bit more easier for HMRC to have to get that information. And there is this question about, well, how far is it going, all this sort of stuff. But they've always had that capacity. They've had that information about flights. They have that information. There's a lot of information that HMRC can obtain legitimately through the right channels if they have a reasonable course in the case of a tax inquiry. And it's not unusual for caseworkers to obtain that information. Now, one of the things you ought to say about an inquiry is, when you are undergoing an inquiry, you should have somebody there to represent you, and you're entitled to have somebody to represent you in there. HMRC also has certain rules. It should abide by certain rules. Some of them are legal, set out in law, and the way that they deal with you in an inquiry. And probably the most simplest thing is to look at their charter, their taxpayers' charter, which is based on the legislation, to treat you fairly, to be professional, to be transparent. And if HMRC says that it now believes that you owe more tax, it should present that evidence for it. You should be able to see that evidence. For obvious reasons, you might want to test it in court. There are times, though, when HMRC will get information from third-party sources or whistleblowers. That's very common. And many of my inquiries started off from third-party source or whistleblowers. And there may be reasons, legitimate reasons, why HMRC is not able to mention that.
Right.
However, they can't use that to say, oh, we've got this information, we ain't going to tell you about it, but we now know you owe us X amount of pounds, blah, blah, blah. Can't do that. They have to go off and do their research and find that other information that will then allow them to say, if they should then be challenged and go to a tribunal, well, this is the information. The third-party source might just be the light that leads them down that road.
Right.
But it is an organisation that has a very big firm and a team with tens, well, I'd say tens, thousands of people that operate in there, and they do a lot of mining of data and a lot of analytical work on there in order to arrive at a list of potential cases that may go out for inquiries. And the other thing to say is, these days, it's not possible for one individual, like me, for instance, to say, ooh, I've just seen Comfort driving a nice fancy car. I think I'll carry out a tax inquiry into Comfort. It doesn't work like that.
That's good to know.
Yeah,
it's reassuring.
It's very much a process-driven thing. So no one person can sort of target. It has to go through a lot of checks and barriers.
It does.
And there's a lot of researching. So what lands on the caseworker's desk, the officer's desk, they don't have a choice over it. It just lands on there. And you could be selected for an inquiry purely randomly.
It's like an investigation, isn't it? It's always on the balance of probabilities.
It is.
If just a minor suspicion, HMRC still wants to verify that you're compliant
But
with
it's
it.
important to remember there's also the element of the random inquiries, where HMRC is required by its own systems. It's checking its integrity of its systems, that actually it is looking in the right places where it should be and it's not missing things across various business sectors and various areas of industry. So you can get a purely random inquiry, and the officer is required to work that inquiry as though it were a proper inquiry going through. Can't take shortcuts, otherwise it defeats the whole object.
That's really good to know. How can businesses minimize the risk of an HMRC compliance check?
Oh, the best thing to do is, we've mentioned this before, is records. Keep the right records of the right quality about your affairs and transactions. Gaps in records are where inquiries start to expand and flow through.
Yeah.
Secondly, make sure that you've got a decent accountant who overlooks things for you. Preferably, you get an accountant or a tax professional who'll review your records in the way that HMRC would review them. For instance, cross-checking your payroll records, checking your personal tax affairs against those of the companies to make sure there's no misalignments or gaps in that information, making sure they've accounted for all of your offshore interests, if you've got any, and these sort of things. It's the small things, it's the attention to detail that really matters here. Now, if you get an inquiry and all of that stuff is up front and you've got the right advisor, they can pinpoint straight away what the issues are with HMRC. And a good caseworker should tell you what their issues are.
Yes.
Okay? There's no point in keeping it a secret. You've got to guess what I'm after. I'm going to tell you. You know, I got an issue with this particular bank transaction or this particular bank account that just suddenly appeared out of the blue. What's it all about? And if you've got the right records and you've got that reason to explain what's going on there, then the right advisor should be able to write a letter, send it back, and that should satisfy the inspector. They may ask for some additional information as evidence to check, cross-check that sort of stuff.
Yes.
And you've done it. Certainly we've done it ourselves, where we've issued one letter to an opening inquiry and the officer's been satisfied with the response and the information, and the inquiry is closed.
Yeah.
So inquiries can be closed quickly.
Immediately.
Admittedly, it's probably the exception for many.
Experience.
But they can be closed quite quickly within the space of that. On average, an inquiry can last around, I suppose the official line is, they say 6 months. I would say 8, to be honest.
Yes.
I've never seen
because
one
there are
for 6.
delays and then people go on holiday.
Just,
you never know what's going to happen.
But they can go on longer,
can.
a year, and I have certainly seen some go into 2 years. And it depends on the complexity of the inquiry, the issues that are involved, and of course the experience of people. If there's changes in individuals, accountant firms and tax inspectors, all of these things add up and can go. So there is no hard and fast, but ideally HMRC would like to see its inquiries done within 12 months. Reality is they do take longer.
And I will advise businesses to have these frequent conversations with their accountants by the time you have a compliance check open,
It's too late.
I advise that you go see a tax specialist.
Yeah,
Because if you're getting a compliance check, even with an accountant, that means your accountant did not see everything and did not cover everything. So I would say find a tax specialist, someone who's specialized in inquiries and who knows what they're doing.
Listen, it's just impossible to cover everything in tax.
I agree.
And I always say this. You're going to make a mistake in tax.
We all do.
It's just a very complicated area. The idea that you can go through 12 months and be absolutely perfect on everything in your business account is just not credible. And secondly, you're also relying on third parties that you engage with, having their records absolutely spot on.
Yeah.
So there's always going to be a mistake. The thing is it an innocent mistake? If it's an innocent mistake beyond your control, that shouldn't be an issue. If it's something that you could have done better, such as making sure that your systems are now up to date. Are you using systems and running your business that when you first started out 10, 15, 20 years ago? You're now a much bigger organisation. You're probably employing 50 people.
That's
Is it
an
really
important point.
adequate to have a system when you were a two-man business? That's a big problem. So you need to make sure you've got that advisor. Getting somebody in to regularly review your systems and carry out a compliance review of your affairs is probably the best health check you can get, so that when that compliance comes, you are as best prepared as you can be. And you don't have to start thinking about...
From the beginning.
Have I missed something?
Under pressure, anxious and all that.
Yeah.
I agree.
That's
Thank
where
you
it
very
goes.
much.
So, I think we kind of covered everything on there on inquiries that we can in this bit. So, thanks for listening, and we hope you found this useful. And if you've got any comments, get back to us, and we'll see you soon.